Hey everyone, it's George from Blockchain TXP, and today is the 12th of Jan 2023, and the global cryptocurrency market has just crossed the $900 billion mark. Now, what happened earlier today is that the CPI numbers were out. Essentially, it means the inflation numbers were out. Now, what I want you to do is, guys, I want you to think and I want you to ask, where do you look at the inflation numbers from? Do you look at inflation numbers via mainstream media? Or do you look at inflation numbers by crypto influencers on YouTube? I did post via LinkedIn a poll which did ask where should you look at information, particularly with reference to inflation, and the poll answer was really surprising. Now, later on in the episode, I'm definitely going to share the only official website which should be looked at when you look at inflation numbers, but nonetheless, the news is that the inflation numbers is down to 6.5%. Now, because of that, the price of Bitcoin and cryptocurrencies has gone up, and the global cryptocurrency market has just crossed the $900 billion mark. But listen, guys, the scariest news that is going on right now is about Digital Currency Group, and there is a very high possibility that they might be going belly up, and if that thing happens, it's going to have a catastrophic impact on other protocols, that is Grayscale Investments, Genesis, and maybe even Gemini Exchange as well. And Barry Silbert, who's the person responsible for all of these protocols, actually did tweet that we need to focus on having fun and making a dent in the universe. So definitely not ideal. So we'll definitely be exploring that in today's episode. Now listen, guys, every Mondays, Glassnodes, they tend to provide a weekly insight, and what they tend to do is they tend to give an analysis of what has happened in the previous week. Now on the 9th of this month, they did confirm that Bitcoin inflow volumes were currently relatively less. So we'll very briefly talk about that in today's episode. And apart from Glassnodes, even CoinShares, they tend to provide a weekly blog. Now I particularly like the blog which CoinShares put up because they put up a very comprehensive screenshot and becomes relatively easier for us to understand. So in today's episode, we'll definitely touch base on both that reports. Now unfortunately, we also have some negative news regarding blockchain.com, and the news is that they are reducing their staff by 28%. And this is unfortunately not the first round of job cuts that they have. In 2022, they did fire quite a lot of employees as well. So we'll very briefly talk about that in today's episode. Now, like we do in every Crypto and Coffee at 8 podcast, we're going to be covering two news regarding UAE. And the first news is about Abu Dhabi's VENOM Blockchain Foundation. And they are launching a $1 billion fund for Web3 and blockchain protocols. And ICEBERG Capital Management is also part of that. So we'll definitely go ahead and talk about that in today's episode. And the second news is about Abu Dhabi-based Digital Asset Association, and they have set up a crypto regulators committee. So we'll definitely look at the positive and the negatives of associations. But overall, the intention seems good and looks like it'll definitely help the crypto, blockchain, and Web3 ecosystem. So we'll talk about that in today's episode. So let's kickstart today's episode. Welcome to the Crypto and Coffee at 8. The daily podcast that keeps you up to date on all latest developments in the world of cryptocurrencies, blockchain, and NFTs. Join us Monday to Friday as you kick off your day with a cup of coffee and a deep dive into the exciting and rapidly evolving world of digital assets. We'll cover the latest news and trends in the cryptocurrency and blockchain space, as well as delve into the growing world of NFTs or non-fungible tokens and metaverse. Plus, we'll keep you updated on the latest developments from Dubai, UAE, and the wider Middle East region. Whether you're a seasoned crypto enthusiast or just getting started, Crypto and Coffee at 8 has something for you. Our expert host will provide insight and analysis on the most important topics in the industry and help you stay up to date on the latest developments. We'll bring you interviews with leading figures in the crypto and blockchain space and explore the ways in which these technologies are changing the world around us, from the impact on traditional financial systems to the potential for revolutionizing industries and transforming societies. We'll cover it all on Crypto and Coffee at 8. So tune in and join us for a daily dose of Crypto and Coffee at 8, and let's stay ahead of the curve together. We'll start your day off right with the most important news and insights from the world of cryptocurrency, blockchain, and the metaverse, and help you navigate this exciting and rapidly evolving landscape. In Crypto and Coffee at 8, the daily podcast covers the latest developments in the world of cryptocurrency, blockchain, and the metaverse. We'll also bring you updates on the latest news from Dubai, UAE, and wider Middle East region. This also includes a range of topics such as developments in the local and blockchain industry, including new projects and initiatives, regulatory updates, and policies related to cryptocurrency and blockchain in the region, local and regional events, and conferences focused on crypto and blockchain, interviews with leading figures in Dubai, UAE, and Middle East crypto and blockchain community, coverage of any significant news or events related to cryptocurrency and blockchain in the region. By covering these local and regional developments, in addition to the wider world of cryptocurrency and blockchain, Crypto and Coffee at 8 aims to provide a comprehensive overview of the industry and its impact on the Dubai, UAE, and Middle East region. Now, before we kickstart today's episode, I have an important message, so check this out. Firstly, guys, Startup OI is global one-tech platform for tech. It offers global high-paying tech jobs with flexibility in working time and location, global free tech events, and tech networks to connect with global like-minded engineers. A brilliant platform to listen to the tech experts in Metaverse and to grab their insights. Now listen, all you have to do is download the app Startup OI. If you're using an Android version, go to Google Store and App Store for iOS devices. Alternatively, you can also click on the show notes below to download Startup OI. Next, guys, listen, if you're into fitness, if you're into adventure, if you want to do something wild but still want to keep your health in check, there is a new podcast in town, a podcast focusing on obstacle course race in the Middle East. The podcast is called Rise in the Obstacle Course Race, and Rise in the Obstacle Course Race podcast is a peer-to-peer community-driven podcast where they talk all about obstacle course race in the Middle East, from Sandstorm to Spartan Race, from Tough Mudder to Desert Warrior Challenge, and also the Government Gov Games, and quite a lot more. The podcast has interviews with athletes locally and internationally to get inside scoop on how athletes prepare for obstacle course race. In the podcast, they also talk about interesting stories on why they are motivated to do obstacle course race. And that's not all. They also plan to release 7 NFTs. And these NFTs are no ordinary. These NFTs will represent every emirate in the UAE. And listen, guys, these NFTs are going to be absolutely massive. So do one thing, go to Spotify, go to iTunes, go to any leading podcasting platform and search for Rise in the Obstacle Course Race podcast. And finally, guys, not your keys, not your crypto. If you have dabbled with cryptocurrencies and now are seriously getting to protect your cryptocurrencies, there is no better way to protect it by using a hardware wallet. And this is where Ledger Wallet kicks in. And Ledger Wallets are hardware cryptocurrency wallets made by Ledger, a company headquartered in Paris, France. And Ledger's hardware wallets are multi-currency wallets that are used to store private keys for cryptocurrencies offline. And Ledger offers 2 hardware wallets, the Ledger Nano and Ledger Nano X wallets. They are world-class experts with extensive crypto security backgrounds. They continuously look for vulnerabilities in Ledger products in a constant effort to improve the level of security. Now, in today's world, securing these digital assets is a critical challenge, and this is where Ledger kicks in. So click the link below to buy your hardware wallet and support this podcast. It is a brilliant way to support this podcast. So what are you waiting for? The link is in the show notes below. Now, since we've taken care of that, let's look at the global cryptocurrency market. Now look, guys, the global cryptocurrency market has just crossed the $900 billion mark just a few days ago. As a matter of fact, a little over a week ago, we were on the verge of going well below the $800 billion mark. So it looks like the global cryptocurrency market is on an uptrend, but will it be temporary? Is it possible that the prices of global cryptocurrency market could go down? Now, because of the news regarding digital currency group, I wouldn't be surprised if the global cryptocurrency market does crash once again. Now, since the last 24 hours, it is up by 4.78%. What I really liked about the numbers of the total crypto market volume is that it is at $63.27 billion. And since the last 24 hours, it is up by 95.23%. And look, guys, I did say in my podcast a few days ago that in 2021, 2022, even in 2020, on an average given day, the total crypto market volume used to hover somewhere between $80 to $120 billion. The numbers have been absolutely devastating in 2022, particularly in the last 6 months. But nonetheless, hopefully 2023 has some positive numbers. The total volume in DeFi is currently at $4.62 billion, and the total value locked is pumped up to $42.35 billion. Now, just a reminder, guys, on the 3rd of Jan 2022, the total value locked of all DeFi protocols was $242 billion. So $200 billion has been wiped off from the total value locked in DeFi protocols. I just thought I'll give a reminder of the total value locked at its all-time high, but nonetheless, it is at $42.35 billion, and Lido is dominating the pack with 16.67%, and $7.07 billion is locked in its protocol, followed by MakerDAO at $6.65 billion, Aave at $4.25 billion, Core Finance at $3.95 billion, and Uniswap at $3.54 billion. Now look guys, ideally DeFi should be leading the pack. I wouldn't be surprised in the later half of this year we might be getting newer innovation, newer fads in the world of DeFi. Because look, if cryptocurrency wants to survive and if blockchain protocols do want to be the game changer, I very strongly feel that DeFi should be leading the race and not stablecoins. Now unfortunately, stablecoins is still leading the race, and as of today it accounts for 91.26% of the total crypto market 24-hour volume, and the volume of stablecoins has marginally gone up, particularly since the last 3 months or so. It is still ridiculously less at $57.74 billion, and Tether USDT accounts for $41.89 billion, followed by Circle USDC at $4.74 billion, and Binance USD at $11.02 billion. Now look guys, in my podcast yesterday, I did talk about some FUD going on regarding Binance, so please check out the podcast yesterday. Now unfortunately today I do not see absolutely any news in the cryptocurrency world regarding Binance, so really I'm not sure what is going on. Now let's look at the market share, 24-hour trading volume and dominance between Bitcoin and Ethereum. Bitcoin's market share is at $361.9 billion. Ethereum's market share is at $173 billion. The 24-hour trading volume of Bitcoin is $34.5 billion and Ethereum is at $12.9 billion, and it just might cross the $13 billion mark maybe in the next couple of hours. The dominance of Bitcoin has marginally gone up and it is at $40.02 billion. Now one question which I wanted to ask is, what is the lowest dominance that Bitcoin has ever had in its history? Now this is because of the numerous amount of shitcoins that started in 2017. Because of that, Bitcoin's dominance has been going down, and as of today, 12th of Jan, there are well over 22,300 and more different types of cryptocurrencies, and Ethereum's dominance is at 19.30%. So the question is, what was the lowest dominance of Bitcoin in its history? Mention your thoughts and comments in the comment sections below. Now let's look at the market cap of smart contracting platforms. Ethereum's market share has shot up and it is at $174 billion. Binance BNB has relatively been the same. It is $45.80 billion. Cardano is at $11.33 billion. Polkadot is at $6.17 billion. And finally Solana at $6.13 billion. So it looks like Binance FUD is currently still in play. Now really I'm hoping that Binance does not tend to have a catastrophic impact somewhat similar to FTX or Terra Luna, but in the cryptocurrency world guys, you never say never. Now let's look at the king of all kings, that is Bitcoin. Now since the last 24 hours, Bitcoin has posted notable gains and looks like this is in anticipation of the CPI numbers report, and the inflation numbers were ridiculously low at 6.5%. Now look, the inflation numbers are not the best, but compared to 2022, it's definitely less. Now it did rise 5%, and a day prior, it did rise quite a lot as well. And Ethereum did also pump up because of this news. So let me just break down Bitcoin, Ethereum, and Binance Coin, because Bitcoin is currently at $18,757, and since the last 24 hours, it is up by 7.33%. Since the last 7 days, it is up by 11.38%. Ethereum is at $1,420. Now, since the last 24 hours, it is up by 6.23%. Since the last 7 days, it is up by 13.63%. Binance Coin is at $286. Since the last 24 hours, it is up by 2.60%. Since the last 7 days, it is up by 11.22%. Now look guys, if the cryptocurrency market is reacting to news regarding CPI numbers, this is definitely not ideal. It just means that the global cryptocurrency market is still heavily dependent on fiat currencies. Ideally, Bitcoin, Ethereum, cryptocurrencies such as Polkadot should not have any impact on the CPI numbers. Now once the separation of money and the state will happen, which might take at least a couple of decades, it could be possible that these news and information does not have impact on the price of global cryptocurrency market. Now, really, I'm not sure if that will happen in a decade's time or so, or it might be longer. Now, look, guys, let's talk about the inflation numbers. Now, the inflation data that you need to look at is via the website of Bureau of Labor Statistics. Now, forget all the information from mainstream media, forget all the cryptocurrency influencers. Go to the website of Bureau of Labor Statistics. It gives out very crystal clear detail on the CPI numbers, and it gives out details of inflation for each specific areas. So you're talking about oil, you're talking about energy, you're talking about food, you're talking about shelter and gas prices, and quite a lot. The inflation number is down to 6.5%. You need to understand that the goal of Jerome Powell, and the goal is generally speaking, is to have inflation below 2%. Now, when the 45th president was in charge, the inflation numbers were well below the 2% mark, but ever since President Joe Biden kicked in, the inflation numbers went off the roof, and this is because of excessive money printing. Now, because there is excessive money printing, the prices tend to rise, which gives rise to inflation, and then Jerome Powell decides to go ahead and increase the interest rate, and that creates a lot of chaos. Now, one thing which I did mention is that in December, Joe Biden did sign the $1.7 trillion in federal spending bill, and I very strongly feel that a part of that fund is used to manipulate the inflation numbers, and that's one of the reasons why the inflation number is down. So I wouldn't be surprised after 3 months or so, the inflation numbers pops back to 7 or 8%. But I really am hoping that I'm 100% wrong, because having high inflation numbers is definitely not ideal. Now, James Butterfield, who's the head of research at CoinShares, did actually have an interview in Decrypt, and what he said is that the market seems to be interpreting that this is dovish for the most part. From a crypto perspective, this is likely to be supportive as well. So read through the article regarding Decrypt. Now, lately, guys, Decrypt is turning out to be one of my favorite news channels as well, because they tend to provide the real first source of information as well. Now, look, guys, every Mondays, Glassnodes and CoinShares, they tend to provide weekly insights and blogs giving a snapshot of what has happened in the previous week. Now, James Butterfield did write a blog which is available on Medium, and it stated that on the 9th, minor negative sentiment persisted with the outflows of $10 million and Bitcoin some minor outflows totaling $6.5 million for the third week in a row, which implied that the sentiments at the beginning of 2023 does remain negative. But in the blog, he did actually mention that XRP, on the other hand, saw inflows totaling $3 million, and this was because of clarity on its legal issue with SEC or Security Exchange Commission. The look, as the Ripple army has been relatively quiet, but as and when they get clarity on the case with SEC, the price of XRP tends to pump up. Now let's get back to cryptocurrencies and blockchain protocols. Called RippleNet or XRP has probably nothing to do with blockchain, has nothing to do with open source. Now, Glassnodes, they did provide a weekly insight on the 9th as well, and they also confirmed that Bitcoin inflow volumes are currently between $350 million and $400 million per day, which is a far cry from the multi-billion-dollar level seen throughout 2021 and 2022. Now, this is no surprise, because if you look at the price of Bitcoin, it has definitely crashed since 2021 and 2022. Now, usually these insights and blogs do tend to give a very good indication of what to expect in the following week. That's a Monday or Tuesday. But when there are some one-off events like the CPI numbers that tend to go out, the numbers would not mean anything. Now, it could be possible, guys, that towards the end of this week, the prices of Bitcoin and global cryptocurrency market would go down. Now, the next piece of information that we need to look at, Jerome Powell will be announcing the next interest rate hike, and he does this interest rate hike based on the inflation numbers. Now, because the inflation number has gone down to 6.5%, a decrease from 7.1% in November, there is a very high possibility that the next interest rate hike will be rather less. This is definitely good news, particularly when you talk about the world economy, and this might definitely reflect an impact on the price of Bitcoin and cryptocurrencies. Now, I'm not sure the date on when Jerome Powell will announce the interest rate, but what you can do is go to Bureau of Labor Statistics website. It does give you a calendar and the scheduled dates when Jerome Powell will be given information. Alternatively, you can also go to the Federal Reserve Board website, look at the schedule in advance, and usually they tend to go live via YouTube as well. And one thing which I often say is, whenever Jerome Powell goes live, make sure that you watch his session live. It usually lasts for 40 minutes or so. There's a lot of question and answer session by mainstream media as well. So definitely check that thing out. Now guys, let's talk about some scary piece of information. Now there is a breaking news that is going on, and Financial Times has reported that crypto broker Genesis owes creditors more than $3 billion, prompting its owner, Digital Currency Group, to explore selling assets in its large venture portfolio to raise money, according to people familiar with the matter. Now look guys, this would be an absolutely catastrophic event. The consequences of this will be as strong as FTX's collapse, and apart from that, companies and investors that are associated with Genesis, DCG Group, and even Grayscale Investments will get affected as well. And unfortunately, DCG Group, that controls crypto media outlet CoinDesk and investment manager Grayscale Investment, is seeking to raise fresh cash after its Genesis unit was wrong-footed in November because of the FTX collapse. So definitely read through the article, because the article is really scary. Now, what kind of an impact will this have on the cryptocurrency market? Now, the article states is that DCG Group is considering offloading part of its venture capital holdings, which include 200 crypto-related projects such as exchanges, banks, and custodians in at least 35 countries, and is worth about $500 million, according to people familiar with this matter. Now look guys, this could be another black swan event in the world of cryptocurrency, and unfortunately, if this thing happens in the month of January, it just puts the wrong trail ahead for what to expect in 2023. And again guys, this is because of the collapse of FTX exchange. Now Grayscale Investments has over 64,000 bitcoins. Now imagine guys, if they are seeking to raise fresh capital, is definitely not ideal, and I wouldn't be surprised if we might be seeing another black swan event in the first month of 2023. And Barry Silbert has actually tweeted that we need to get back to having fun and making a dent in the universe. This is absolutely terrible. Now what I'd really recommend you to do is go to Barry Silbert's Twitter account. Now he has been extremely silent for almost 4 to 5 months now, but ever since Cameron Winklevoss did actually publish a letter blaming Barry Silbert, he started to respond via Twitter. Initially, he actually declined, stating that Genesis and DCG Group do not owe them $1.75 billion, but looks like that is not the case. Now, unfortunately, guys, the impact of this news could be absolutely devastating. Now, really, I'm hoping that somehow, some way, we get to surpass this, but let's try to see what happens and what kind of an impact this will have in the world of Bitcoin, cryptocurrencies, and blockchain protocols. And every Fridays, guys, I do have a Metaverse Everything podcast, and it is news such as this that also has impact on cryptocurrency and blockchain protocol that is directly or indirectly connected to Metaverse. Now, unfortunately, I do have another negative news, and this is about blockchain.com. And Seeking Alpha, one of the leading publications, has reported that blockchain.com is set to shed 28% of its staff as the crypto market downturn persists. Now, they're currently laying off over 28% of its headcount, and this is approximately 110 staff. Now, remember, guys, in 2022, blockchain.com did make a lot of other employees and staffs redundant as well. So 2023 is definitely not having the ideal start that we would have expected. Now, guys, let's talk about two news regarding UAE, and both the news are from Abu Dhabi. Now, the first news is about Abu Dhabi VENOM Foundation launches $1 billion fund for Web3 and Blockchain Committee. So let me try to give out some more information, because I'm pretty much sure that I did cover VENOM Foundation, and I also covered ICEBERG Capital Management. So let me run through the news once again. Now, the website for VENOM Foundation is venom.foundation, and VENOM is a blockchain platform designed to serve the needs of Middle East, North Africa, and other emerging economies around the world. And the network provides strong foundation for central bank digital currencies and Web 3.0 application. And the goal of VENOM is to develop an ultra-fast scalable blockchain that can support a growing ecosystem of products and services built by the vibrant community of users. And they are driven by the belief that technology can make a real impact in the world of backed stablecoins, derivative exchanges, metaverse, social messaging platform, NFT marketplace, launchpad, and quite a lot of other. Now, all this information is via website, So essentially, they're focusing on Venom Wallet, which is a non-custodial wallet. And when it comes about Venom blockchain ecosystem, they have a protocol called as Venom Get, which is essentially an easy way to exchange any of your token with other chains to Venom. They also have Venom Bridge, where you can explore the world of interchain transactions, which saves time and money and moving assets from one network to another. They also have Venom Scan, where you can explore, search transactions, addresses, tokens, and other activities on Venom blockchain. But when I tried to explore that, it did ask for a username and password, and I definitely don't think that is ideal, because yesterday in my podcast I did talk about the pillars of open blockchain. Ideally, there should be no username and password, so I really am not sure what's the game there. Now, they also have Venom Pool, where staking and validator nodes are allowed to take smaller token holders to participate and then benefit from validation. And they also have a section on Web 3.0 world. It is an easy-to-use platform built on the Venom blockchain for swapping, enhancing liquidity pools, and farming available assets. So it looks like they're getting into quite a lot of things in the blockchain space. Now, this news is published by Cointelegraph, and what the news states is Abu Dhabi-based VENOM Foundation launches $1 billion fund for Web3 and blockchain protocols, and Venom Venture Funds is allocating $1 billion to invest in Web3, blockchain, and cryptocurrency projects and services. And the Abu Dhabi-based blockchain platform and investment manager ICEBERG Capital announced they will allocate $1 billion of funding to Web3 and blockchain firms through a new partnership. So it looks like they're having a partnership between ICEBERG Capital and Venom Foundation. Now, the Venom Venture Fund is set to invest in protocols and Web3 decentralized applications, often called as dApps, focused on payments, asset management, decentralized finance or DeFi, and gamify products and services. And the fund is a partnership between Layer 1 blockchain solution, that is Venom Foundation, and Abu Dhabi global market investment management firm ICEBERG Capital. Now, the latter, that is ICEBERG Capital, will look to leverage its existing network to offer incubation programs and industry connections, as well as marketing, exchange listing, and technical, legal, and regulatory support. And ICEBERG Capital will manage the fund, investing in projects and companies to pre-seed and Series A funding rounds. The partnership aims to accelerate business developing blockchain, DeFi, and Web3 products and services, and the fund will support companies and projects with a global footprint, and it is not limited to Abu Dhabi-based firms. And the investment firm will look to attract startups and technology firms to use Venom's scalable proof-of-stake-based blockchain solution. And Peter Ness, who is the Venom Venture chairman, highlighted the key services that could operate on top of Abu Dhabi global market regulated blockchain. So it looks like the partnership does seem really strong. And look, guys, if you're a startup, particularly working in the Web 3.0 space or in the blockchain space, you definitely need to check it out. Now let's discuss the second news, and that is once again about Abu Dhabi. And the news is Abu Dhabi-based Digital Assets Association is planning to set up crypto regulation committee. And the region's Crypto and Blockchain Association said there were more need than ever to drive chain, and this is because the legend Sam Bankman-Fried and the FTX collapse. And Abu Dhabi-based Crypto and Blockchain Association is setting up a new regulators committee to help drive change and learn lessons in the wake of last year's FTX exchange collapse. And the association said that the events last year highlighted the need for fit-for-purpose regulation as well as education for investors. And Jehanzeb Awan of the Middle East, Africa and Asia said it is pivotal for the industry to help the investing public understand the opportunities and corresponding risks that come with investing in cryptocurrencies. Now look, guys, the whole idea about associations, I particularly am not a fan of. Now they do have something called as MeCaps, which is M for mother, E for elephant, A for alpha, A for alpha, C for Charlie, B for Bravo, S for sugar. And that said, its board is setting up a regulatory committee which aims to bring together the key regulators in the regions covered by the association to work together in building regulatory regimes that allow for effective oversight of the crypto industry. Now look, guys, historically, Bitcoin and Opal blockchain have severe allergic reaction to association and committees, because what happens is these associations and committee often have a very strong sense of centralization, and this centralization often leads to double spending, or it helps in giving direction for the blockchain ecosystem. And I personally think it is definitely not ideal to have a committee or an association for open blockchain. So who decides what is good for the protocol or what is bad. The decision making is done by a central entity, not peer-to-peer. The one thing, guys, you need to remember when you talk about open blockchain, and particularly for the role of miners, the miner's role is only to update the transaction, not to validate this transaction. So when you have regulatory committees, they tend to put restrictions as to what the miners can do. They would also create a sense of best practices that miners need to follow. Now, this in a regular industry is great, probably something which is needed, but in an open blockchain protocol, this is definitely not ideal, because over time, these associations and committees tend to direct the flow of blockchain protocol. An association and committees in the near future can also have a very strong say so far as the direction of decentralized apps is concerned. So definitely not ideal. Now look, guys, that thing being said, I'm 100% in favor of laws and regulations, and laws and regulations are definitely needed for centralized exchanges, companies and startups that offer service as a solution in the cryptocurrency and blockchain space, or whenever there is any central decision making is concerned. And one thing, it's so critical to understand the pillars of open blockchain, which is popularized by none other than Andreas Antonopoulos. And I did release a podcast a few days ago where I discussed the importance of open blockchain, permissionless, censorship resistant, borderless, neutral, and publicly verifiable. And unfortunately, association and committees do have a negative impact in the usage of open blockchain. Nonetheless, these are my thoughts and opinions. Now, what are your thoughts, guys? Do you agree to it? Disagree to it? Mention them in the comments below. And that's all for today, guys, in the Crypto and Coffee Update from Blockchain DXB. In case if you have any feedback or suggestions, please drop me an email to info@blockchaindxb.com. And also check out my website, that is www.blockchaindxb.com. And also check out my website, that is area2071.com, that talks everything about Metaverse. And if you like listening to this podcast, please click on the follow button, give it a 5-star rating, and share the word across. Now, for the next few minutes, it's going to be an Ask Me Anything series where you listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. So let's kick start with the Ask Me Anything series. Hey everyone, it's George from Blockchain DXB. You're listening to the Ask Me Anything series where you listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. And I have a first question by White, who asks, how do you see 2023 for stable coins? Now, White, this is a brilliant question because since the last 6 months or so, two terrible metrics I have been noticing in the world of stable coins. One, the volume is ridiculously low. And apart from the volume being ridiculously low, stable coins have been accounting for a majority of the chunk of the total cryptocurrency market volume. Now, in some days, the total volume of stable coins have accounted for well over 98% of the total cryptocurrency market. This was definitely not ideal, but unfortunately, White, I do feel that that trend might continue at least for the next 5 months or so. I wouldn't be surprised if stablecoins is still dominating the race so far as the cryptocurrency volume is concerned. What I'm really hoping for is that DeFi protocols do actually overtake the volume of stablecoins. Now, will that thing happen? I really am hoping for, but I'm not sure if people are actually using DeFi protocols. Because look, when you talk about DeFi protocols, these protocols should be driving the change in the world of cryptocurrency and blockchain. But unfortunately, certain days the volume of DeFi in 2023 has gone as less as $1.5 billion. So definitely not high expectations, at least in the first 6 months of 2023. But I do hope that there are some innovations, particularly in the world of zero knowledge proof, in the world of privacy, which does kickstart mainstream adoption of DeFi protocols. And if there is somehow some way we can link this to metaverse protocols, keeping in mind the transaction per seconds, I do feel that DeFi protocols should be leading the pack. Now, unfortunately, in 2023, I do not see much use case of stablecoins. And one of the main reasons is I do feel that central bank digital currencies will be talk of the town in most likely in the second or the third quarter of this year. Once central bank digital currency becomes news, you will see experts on LinkedIn talking positive things about central bank digital currencies. This is an absolute no. Now, based on the reports that I read on LinkedIn, people are praising central bank digital currencies and talking about innovation. and they truly don't understand that central bank digital currencies, once adopted on a global scale, will give the nation state to have more control over your spendings. They can stop transactions at will and quite a lot of other. Now, that thing being said, CBDCs do have certain brilliant use cases as well. One thing which I did mention in my podcast a few days ago is once central bank digital currencies goes mainstream, it could be possible that using burning mechanism, we might be able to better manage supply, we might be able to better manage inflation, so we might be not seeing high prices once CBDCs goes mainstream and quite a lot of other. But going back to your question, White, I don't think in the first 6 months there might be much use case of stable coins. And then you also need to ask this question, why use a stable coin where you already have central bank digital currencies? Because at the end of the day, stablecoin issuers, they do act as a bank and they do not use blockchain protocols, and transactions in stablecoin can be censored at will. But when you talk about algorithmically backed stablecoin, that could be a game changer. Unfortunately, Terra Luna's collapse has created many people a detractor of algorithmically backed stablecoin, and some of the OGs in the stablecoin do actually feel that algorithmically backed stablecoins do have a potential to fail, but maybe we find new innovative ways where we might create some kind of backup for failures or quite a lot of other. Now, that thing being said, what, I do have to say that Terra Luna as a protocol was perfectly fine. Unfortunately, there was some loophole and there were some notorious intentions, not by the Terra Luna team, but maybe by someone else, because of which stablecoins has been a detractor, especially for investors and for people getting into the cryptocurrency space. So the first 6 months, I do not see much change in stablecoins. The next 6 months, I really am hoping that stablecoins accounts for a lesser percentage of the total cryptocurrency market volume. So let's try to wait and see how it turns out to be. Now, really, I'm hoping that nothing bad happens so far as DCG or Digital Currency Group is concerned, and that does not have an impact on grayscale investments and quite a lot of other. So this weekend, while it will be absolutely critical. Now, what I'd really recommend you to do is this weekend, make sure you keep on checking the volume on Tether USDT, Circle USD, and Binance USD as well. So that's all for today, guys, on the Ask Me Anything series from Blockchain TXP. In case if you have any feedback or suggestions, please drop me an email to info@blockchaintxp.com. Also check out my website, that is www.blockchaintxp.com, and also check out my other website, that is harry2071.com, that talks everything about Metaverse. And if you like listening to this podcast, please click on the follow button, give it a 5-star rating, and share the word across. And remember, guys, Monday to Thursdays, 8 a.m. to 8:30 a.m., we have Crypto and Coffee at 8, where we cover top news and information pertaining to Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. And how the series of episodes into Crypto and Coffee at 8 works is, we usually cover some top news and information pertaining to the price of cryptocurrencies, some major breaking news, occasionally short and sweet news as well, news that has an impact in the cryptocurrency world. The other two news and information is related to Dubai, UAE, and Middle East in the world of Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. And what you're listening to right now is the Ask Me Anything series, and you listeners can ask any questions from the cryptocurrency world. So thanks so much for listening and have a nice one. Bye-bye.